Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening, you're watching CNBC TV18. This is After the Bell. Here are the headlines that we're tracking at this hour. Finance Minister chairs crucial meetings to stimulate the economy, encourages PSUs to spend more but stick to dividend commitments, promises industry to get cracking on GST-related issues faced by exporters.
It's like a patient in a hospital and the doctor is giving one shock therapy after another.
Former Finance Minister Yashwant Sinha sticks to his economy criticism in an exclusive interview to CNBC TV18. This as his son and Minister Jayant Sinha mounts a defense of the Modi government, says the critique is based on a narrow set of facts and misses the structural reforms that have been set in motion.
How much room is there for further cuts?
I think they should cut at least 50 basis.
Former Finance Minister Chidambaram says there's room for a 50 basis points rate cut, wants the government not to spend its way out of trouble and stick to its fiscal deficit commitment.
I could see the Nifty, lose a few more points before it actually troughs out. And then the point is, does it come back in a V?
Smart recovery on Dalal Street as Nifty ends about 97.50. The Sensex rebounds to gain 120 points. Morgan Stanley's Rhythm Desai says the market will rise after some more correction and bets on the Sensex hitting 1 lakh in the next 10 years. UBS and CLSA differ on their near-future market reading. CLSA's Lawrence Blanco believes 9,700 is a buying opportunity, but Gautam Chowcharia of UBS sees Nifty fair value at 9,000 by December end.
The Baroda factory is being set up, and I think it's on track. I don't see any change happening.
Railways Minister Piyush Goyal denies that deal with GE is terminated, says talks are on to possibly change the contract terms as electrification is the way forward. Well, those were the top headlines at this hour, but the top story this evening, in a bid to stimulate the economy, the Finance Minister held two crucial meetings today. The first one was a meeting with exporters to iron out the issues with the GST rollout. The second one was with the top 20 heads of public sector units. My colleague Ritu Parna Bhuyan is here with more details. Ritu, let's talk about the meeting with the PSUs first. A clear message to invest more, but at the same time stick to the dividend commitments.
The meeting on PSU capex and dividends was chaired by Finance Minister himself. Around 20 CMDs of PSUs were invited. Also, secretaries of the respective line ministries were also present in this meeting. The crux of the message from the Finance Minister towards the PSUs was that they should capital expenditure. They should keep on spending on capital expenditure and not stop carrying out capex projects. Also, the Finance Minister asked them to follow the guidelines regarding dividends and ensure that whatever dividend is committed, they should pay up within this financial year. We have been also told that if these PSUs face any difficulty in carrying out new projects or carrying out capital expenditure, then they can approach the Finance Ministry to resolve any issues that come in the way of carrying out or spending on capital infrastructure projects. Last but not the least, we spoke to several CMDs regarding if they were asked to pay up additional dividend, and we were told that there was no such instruction. Only message from the Finance Minister was to stick to the committed levels of dividend during this fiscal year. We also spoke to one or two of these CMDs on record, and this is what they had to say.
The meeting is for reviewing the capex projects and how they are going and what is the status and how we will be covering up.
Okay. So any plan?
Every PSU has got capex plans which are well publicized, and it is a regular routine review. Okay, don't attach any meaning to it. No, nothing of dividend is discussed.
Meeting was about capex because the country is on an exponential growth path. Naturally, all CPSUs which are playing major role in partnering the progress of the country, they were advised to ramp up their capex and so that the money is spent for the development of the country. And coming to the dividend part, naturally, we also contribute to the national exchequer. So as per the guidelines we have, we'll have to contribute.
Have the FM spoken for a special dividend yet?
No,
Given
not.
the fact that their revenues are already like
Nothing specific about that.
Meanwhile, in the meeting with exporters, Finance Minister vowed to get cracking on resolving the GST implementation problems. The Finance Minister promised that top-level officials at North and South Block will pay attention to iron out the wrinkles. The meeting was attended by small as well as medium industries, along with the top industry lobbies like CII, ASSOCHAM and the Federation of Indian Exporters. Some GST providers, along with KPMG and officials from Amazon, were also present at the meeting. Some participants raised issues with the GST network and hassles while filing returns.
FM has said that he will prioritize the request made by the different chamber. He will take it to the GST council and decision will accordingly flow. Citing the international experience, we have said that even in countries where GST or VAT system is in place, they have provided exemption on inputs which is required for export production. And therefore, if we are competing with the country, we have to be given a level playing field. So I think that augments will definitely be watched closely by the government. They will take a call on that, and hopefully the GST Council will also look into that favorably.
A day after launching a scathing attack on the government and especially on Finance Minister Arun Jaitley, former Finance Minister Yashwant Sinha has reiterated his concerns. Sinha, who's also a member of the ruling BJP, told CNBC TV18's Timsy Jaipuria that the issues raised by him have been in the public domain for a long time. He expressed hope that the government will respond to those issues in order to remedy the current economic situation.
The issues that I have raised in my article are issues which have been in public domain for a long time. Channels, TV channels have been discussing it, print media has been writing about it, think tanks and other such bodies have been discussing it. So it is not that I have suddenly sprung a surprise.
Do you think it was not the right time for GST to come in, and probably we could have waited, and since we already were dealing with the shocks of demonetization?
I am firmly of the view that if you take any step which you are absolutely certain will lead to disruption, then you have to sequence them in such a way that the effects of this one disruption, they peter out before you introduce a second disruption. If anyone had studied the impact of demonetization, the likely impact of demonetization, such a step at that point of time was not warranted according to me. 2, soon thereafter, you introduce GST knowing that GST will lead to disruptions. So, I mean, it's like a patient in a hospital and the doctor is giving one shock therapy after another without realizing that sometimes it might lead to more serious consequences.
Minister of State for Aviation Jayant Sinha, who's also Yashwant Sinha's son, has responded to the recent criticism of the centre's performance on the economic front. In a rebuttal published in the Times of India, Jayant Sinha has written, and I quote, "Several articles have been written recently on the challenges facing the Indian economy. Unfortunately, these articles draw sweeping conclusions from a narrow set of facts and quite simply miss the fundamental structural reforms that are transforming the economy." He goes on to add, and I quote again, "The new economy that is being created will be much more transparent, globally cost competitive and innovation driven." According to Jayant Sinha, GST, demonetization and digital payments are game-changing efforts to formalize India's economy. Transactions that were taking place outside of the tax net and in the informal sector are now being brought into the formal sector, and the Minister of State for Aviation does believe that this transformation will result in higher tax collection, higher growth and better credit for citizens. While the big growth debate rages on, the key question is what's the way out of the current slowdown? Former Finance Minister and Congress leader P. Chidambaram has said that there is room for a 50 bips rate cut. On the other hand, he has warned the government not to spend its way out of trouble and stick to its fiscal deficit commitment. In an exclusive conversation with Shireen Bhan, the former Finance Minister also hit out at the government for waking up too late to the current concerns.
I don't think the government has that fiscal space to spend its way out of trouble. If they relax the fiscal deficit target, that would be an admission that the revenues are under pressure, or that expenditure has gone out of control, or that they don't care about interest rates rising, or they don't care about inflation rising. Every one of them will send out bad signals. The answer is not to spend your way out of trouble.
If I were to look at the data going back to the UPA times, I mean, FY09 fiscal deficit of 6%, FY10 6.5%, came down to 4.8% in FY11, FY12 5.9%. So you've seen the perils of profligacy. What would be your argument against a deviation?
If you continue with stimulus packages, you will breach all fiscal discipline, deficit will go out of control, inflation will go out of control, and to bring the economy back on track will be a difficult task. If they now go back and instead of 3.2, set the target at 3.5 or 3.7, that'll be a terrible mistake.
There was a lot of flourish with which the government moved on economic matters. What do you believe has gone wrong?
Of the four engines of growth, two were sputtering. Private investment and exports were sputtering. Public investment was propping up the economy, and private consumption was helping. After the two engines more or less shut down, the third engine also started sputtering. Private consumption declined. But the government seems to have failed to notice that three engines were not running. And it was only focusing on one engine, the public expenditure engine. And when we cautioned them, the economy is slowing down, they went and did demonetization.
The clamour is that there should be a drastic reduction in interest rates. CII asking for a 100 basis point cut in interest rates. We've got the MPC meeting on the 4th of October. Do you believe that there is room for a rate cut at all? There is.
There is a room for rate cut. RBI is behind the curve. They should have cut it on the last occasion. They should have cut it on the previous occasion also. But whether they will cut 100 basis point at one meeting, I doubt it. But
how much room is there for further cuts?
I think they should cut at least 50 basis points. There is enough room because inflation is still low.
Let's take a continuous decline. The market today witnessed sharp recovery in the post-lunch session. The bulls managed to hold on to the 9750 level while the Sensex closed with a 120 points gain. The broader markets outperformed. Bank Nifty was a star sector today. For sure, the index saw a sharp rally after 3 p.m. to end with gains of 0.4%. The mid-caps clocked gains of 0.5%. My colleague Anuj Singhal is joining us now. Anuj, was it a case of short covering on the Lal Street today?
Well, finally, some magic of short covering and some bargain buying on the last day of what's been a tumultuous series for the bulls. What was interesting was that it coincided with the market defending the 97.10 mark, which we've been repeatedly pointing out as the last low for the market, last higher low for the markets. In that sense, it's interesting that the market bounced back from there, at least on a closing basis. It was a mix of bargain buying and also short covering. You know, stocks like HDFC Twins led to the move, Kotak, IndusInd Bank. When that happens, clearly there is some bit of bargain buying also involved. But it was expiry as well. Let's not forget that. And it's been a bad series. So it's unlikely that the market makes a bottom just on one day. So what will be key is what happens from here on, because India right now is the worst performing market over the last fortnight or so. The rest of the markets are doing well. India is sulking and falling under its own weight. So next week will be important. We'll test whether 9700 holds or not. FI selling, well, that remains relentless. The DI buying is key. Let's see. For now, the bulls should be happy that they've defended 9700, but I don't think they should be parting yet, because the test of 9700 might be due once again next week.
Thanks for that, Anuj. We'll have to take another short break here, but when we come back, we'll talk about the Indian currency. Stay tuned. To take a look at the day's Mint Street action now, Lata Venkatesh is joining us now. Lata, in the last few days, the rupee has been seeing jitters, but does it seem like stability is returning today?
Well, today, clearly, you realize who was the boss of Mint Street. Clearly, the RBI was calling the tune. From the word go, you could see weakness in the rupee. It went to a low of 65.90 in early trade. But at that point, we got to hear that the Reserve Bank is likely to have intervened in the futures and probably in the forwards market as well. And since then, we saw the rupee recovering a bit, and finally strongly strengthening. To be fair, even the dollar demand receded once importers came to know that, okay, at least there is not going to be a free fall of the rupee. A little bit of exporters willing to supply also came in once the big man showed his hand. But more importantly, it was what happened in the bond markets that helped the rupee. The bonds saw a fairly decent rally. The yield fell from 6.6768 in the morning all the way to 6.61. And that's because globally yields fell. But more importantly, there was this kind of fear in the market that with all the ugly talk going on in the economy, maybe, just maybe, the Reserve Bank will cut rates on October 4th. As the bond strengthened, the rupee guys got a little bit of courage that global bond funds will not come and sell in India, and that also helped shore up the rupee.
Thanks for that. That was about the Indian currency. Let's move on and talk about the General Electric controversy. Work on General Electric's diesel locomotive factory in Bihar is on track, and that's the word coming in from Railway Minister Piyush Goyal. He clarified that the $2.6 billion deal with the US headquartered conglomerate was not terminated and added that the government and GE are exploring all options to reach a decision that is in the best interest of India.
The Baroda factory is being set up, and I think it's on track. I don't see any change happening. We've had very fruitful engagement and discussions with the General Electric team. I discussed with them how their locomotives will be useful for us. Can we explore opportunities where some of these could also be exported? Various discussions which are on the table will continue to be held, and whatever is in the best interest of India will be decided.
In global news, Hugh Hefner, the founder of Playboy, one of the most iconic and controversial magazines of the flower generation, is no more. Hefner started Playboy after Esquire magazine refused him a $5 pay hike. He hit jackpot with his first issue as it featured Marilyn Monroe, and in the magazine turned profitable in 1 year, and Hefner took it to dizzying heights soon. What's lesser known is that Hefner published the first interview of Martin Luther King and took the pro stance against the LGBT discrimination. Hefner died aged 91 at his beloved Playboy mansion. With that, it's a wrap on this edition of After the Bell. Bulls vs. Bears is up ahead.